to Root Zones, bringing you the good news and the bad news of crypto. My name is Wayne.
And my name is Manish.
And if you like money and crypto, make sure to hit the subscribe button. Today, let me share my screen. The Nigerian crypto boss, centralized exchanges that are led to shift the trades to the black market. Now, it has been more than 6 months since the Central Bank of Nigeria, CBN, directed banks to stop serving customers from the cryptocurrency industry. While the measure appears to have succeeded in removing crypto entities from the banking ecosystem, the policy has, however, led to the growth of peer to peer trading. Nigeria's position as the biggest cryptocurrency market in Africa remains unchallenged. For its part, the CBN has complemented its regular arguments against cryptocurrencies with the new routine assurance that Nigeria will have its own digital currency. To understand these dynamics and the impact they have had on the Nigerian crypto space, Bitcoin.com News reached out to Shigozi Iwu, the CEO and co-founder of Niger Crypto, a Nigerian crypto exchange. Now, the CBD directive stopped bankings from partnering with crypto companies affected us in the following ways. At the initial stage, our bank accounts were closed and we had to move funds to alternative accounts. We suspended fiat deposits but left withdrawals open. This move was to allow customers to withdraw freely without panicking. This actually caused reserves to diminish, but the confidence was maintained. Some of the foreign exchanges closed both deposits and withdrawal and hike the price of crypto against the naira. About 2 weeks after the ban, Niger Crypto switched to closely controlled peer-to-peer methods for deposits that reinitiated fiat entry to the exchange. While growth was slow by directive, growth still occurred, but not as fast as the exchange was growing before the CBN directive. We use Haiti as a springboard to enter the Caribbean, as the Caribbean and Latin America market is the next target beyond Africa. We plan to have operations in 12 other African countries and 3 Caribbean countries by Q2 or 2022. Crypto scams have prevented if can be prevented if the government had proper regulatory framework for cryptocurrency exchanges rather than outrightly banning their access to banking. In fact, their actions led to the increase in activity from on the black market. Centralized exchanges have tools to detect blacklisted wallets and dangerous transactions. Centralized exchanges have KYC protocols. Therefore, funds from scam sources can be easily de-anonymized. Working with these central exchanges is one of the wise ways of preventing scams and restricting black market exchanges. Also, the government does not seem to properly engage with the industry when it comes to preventing or stopping these scams. In fact, in many major stakeholders detect these scams before they get steam, but the government usually ignore our pleas to investigate these scams. I personally think that scammers would use other tools even if they do not use crypto. The biggest Ponzi schemes in Nigeria have been non-crypto, and the government agencies have never protected these people from this.
My God, it's a sad news.
Yeah.
Uh,
So
yeah, and
countries.
this is one country where lots of crypto enthusiasts are there. There are many people who are interested to invest in a cryptocurrency industry. It's a sad news for them.
Right. Even in Hong Kong, I just have this news. Let me just share. This cryptocurrency in Hong Kong has hit a record level high, and victims losing Hong Kong 124 millions to fraudsters. Police say that this trend is down, but more people staying at home going online. In During the amid COVID pandemic, crimes involving digital currencies tend to fall into money laundering, online shopping scams, and investment uses. It's all
Hmm.
over the place. What's up, Yulun? Thailand plan to be SEA biggest mining country after they recently tried to ban what was that? Thailand was trying to ban something. I think it was
Some
crypto.
cryptocurrencies, yeah,
Right, I
some
think Bitcoin now they want to be
some
Southeast Asia's biggest mining country. I guess maybe the influx of China is coming into
plus of
Thailand.
China, the resources are cheap, the place cheaper to rent. Those things are there,
Right.
and
I'm going to move over to the next news, which is Cardano. Now, before I go into Cardano, I actually have a video that I'm going to play. So just bear with me. Let me just load that up. This video is basically just to give an overview of Cardano, what it is. It was taken from 2018. So let me just share this. Yeah, it's a central bank, Loon was saying. Alright, so here is Cardano.
Cardano is a new cryptocurrency platform that was launched in September 2017 after more than 2 years of development. It's rather different than other cryptocurrency projects because it is built around peer-reviewed papers. So instead of writing a white paper and implementing it straight to code, the Cardano team actually makes sure that experts from around the world read their papers, improve them, and agree with the outcome. This is a very different way of working. Cardano claims to be the third generation of cryptocurrencies. The first generation was Bitcoin and is essentially digital gold. It's used to transfer and store virtual money, but it's plagued with scalability issues. The second generation started with Ethereum and brought us smart contracts. It improved scalability somewhat, but not enough to become a global currency. The third generation, however, wants to take the previous two generations and improve upon them. Right now, Cardano and IOTA are both considered to be third generation blockchains. Cardano wants to solve three big pain points of the current generation: scalability, interoperability, and sustainability. Let's go over each one. We'll start with scalability, which itself consists out of three problems that have to be solved: transactions per second, network bandwidth, and storage. Transactions per second is the most obvious one. In order for a cryptocurrency to become a global payment system, you need to be able to handle a lot of transactions per second. Cardano's Ouroboros system solves this by adopting proof of stake instead of proof of work. You probably know that Bitcoin uses the proof of work algorithm and lets everyone mine new blocks. This process is slow and not only wastes a lot of computing power, it also wastes huge amounts of electricity. Cardano is much more efficient. It doesn't let everyone mine new blocks. Instead, the network elects a few nodes to mine the next blocks. These are called the slot leaders. So to make this all work, Cardano divides the time into epochs. An epoch is split into slots, a short period of time in which exactly one block can be created. The network then elects a slot leader for each slot, and this is the only person that can mine a block for that particular slot. Slot leaders listen for new transactions, verify them, and then put them inside a block. If a slot leader doesn't complete his task in time or doesn't show up, he loses the right to produce a block and has to wait until he is re-elected by the network. This technique makes Cardano highly scalable because they can increase the amount of slots per epoch and they can run multiple epochs in parallel. The next scalability problem is network bandwidth. Blockchains are stored in a peer-to-peer network. Each node in this network receives a copy of all new transactions. But imagine what happens if there are thousands of transactions per second. The nodes would need a lot of bandwidth to continuously download them all, and that is not very scalable. Instead, Cardano wants to split up the network into subnetworks by using a technique called RENA. Each node will be part of a specific subnetwork and can communicate with other networks if needed, much like the TCP/IP protocol for the internet. And the final aspect of scalability is data storage. Blockchains store all transactions that have ever happened, but how do we handle this ever-growing set of data? The Cardano team is thinking about implementing techniques like pruning, compression, and partitioning. However, they don't consider this a top priority at the moment because storage space right now is still fairly cheap. They'll tackle this problem later in 2018 or beginning 2019. Big problem number 2 is interoperability. This again consists out of two problems. First of all, there are many cryptocurrencies out there, but they don't really work together. And secondly, banks and governments shy away from cryptocurrencies. So the Cardano team assumes that in the future we won't have one coin to rule them all. Instead, multiple different currencies will exist side by side, each with its own protocol and rules. Right now, these don't talk to each other. You can, for example, transform your Bitcoin into Ether without an intermediate. The Cardano project aims to be the Internet of blockchains, or in other words, a blockchain that can understand what happens in other blockchains. This would mean seamlessly moving assets across multiple chains. Then there's also the problem with governments and banks. They shy away from cryptocurrencies because they don't adhere to regular banking laws. It's hard for them to trust a transaction in the crypto world because they don't have any metadata about that transaction. You see, they like to know who made the transaction and for what reason. However, this is also very sensitive information. So the Cardano project wants to allow people to attach metadata to a transaction if they want to. This would make the crypto world play nicer with the traditional banking world. But again, it would be up to the user to decide if he wants that or not. The final problem that the team intends to solve is sustainability. Right now, there are a lot of people who want to build a company around cryptocurrencies. To raise money for their company, they launch an ICO, or initial coin offering. After an ICO, the team ends up with a lot of capital that they can use to fully start their company. But what happens if, after a couple of years, this money runs out? How will they make sure that the development of their technology continues? Should they create a new coin and hold another ICO just to get some cash? This is still an unanswered question, but it's clear that raising money just once isn't very sustainable and doesn't promote continuous improvement. Cardano intends to solve this problem by creating a treasury. The idea is that the treasury will receive a small percentage of every transaction that happens on the network. The treasury itself is a special wallet that isn't controlled by anyone. Instead, it's a sort of smart contract that can release a part of the funds to developers who wish to improve the Cardano protocol. To do this, developers have to submit a proposal to the community saying what they want to change and how much money they need for it. The community can then vote on the ideas that they think is the most important. After a certain amount of time, the treasury takes the most popular proposals and gives them enough money so they can develop their improvements. Over time, the treasury model will keep Cardano sustainable by providing a continuous stream of money that can be used to continue to do research and to improve the system. So far, we talked about all the things that the Cardano project wants to achieve, and as you can see, it's quite ambitious and maybe a little bit risky. They are trying to tackle many challenging problems. Take the treasury model, for instance. It depends on a fair voting system to prevent people from seizing control. The Cardano project is very young and has still a long way to go, but their way of working is very different from other cryptocurrencies. So Cardano might be the project that finally solves some long-standing and fundamental issues, but time will tell.
Yeah. So
Wow.
this is where we are. Shelly and Gogan. I can't really
And this is the
pronounce
roadmap. Yeah.
This is the roadmap. And what's happening right now is that, let's see, on the news, basically Cardano has been one of the ecosystem most prominent projects of the late, with the progress pushing some of the to draw comparisons with the likes of Ethereum. Right now, it is the Goguan era. I can't really get my name
Yeah,
around it
I don't know on what basis they have put the name of roadmap.
on the roadmap.
Very difficult to pronounce.
Yeah, so so well set to add smart contracts functionalities via Alonzo. However, it would seem that Alonzo might have to wait for at least some time. Charles Hawkinson said that the Alonzo, the hard fork combinator event, is strictly about getting its capabilities to the node, and meaning that if you can plateaus the code that was submitted, you will be able to execute those transactions to be valid. The second event is all about building infrastructures that would be around the node. This is expected to allow both off-chain and on-chain code, while also encouraging the building of full dApps inside the system. We've already started the integration process, and usually takes about 1 to 2 weeks when you have a new node, new wallet, for those pieces to fit together. So when that occurs at that point, as long as we are comfortable with that design and those ledger rules, we can begin the countdown to the hard fork process. The latest I keep forgetting. Alonzo update came at an interesting time for the community of the late. Coupled with ADA's lukewarm price action, some have started to question the project's credentials. In fact, quite a few of them have already started taking a pot shot at Hawkinson's predicting that there will be hundreds of assets on Cardano along with thousands of DApps. What's more interesting, the poly market, most people have been betting on Cardano being unable to support smart contracts on mainnet by 1st of October. So that's all, Manish, I had on the
Wow.
news.
All right, so let me share my screen as
So while
well.
Manish sets that up, join us daily live on YouTube and Facebook, 9 p.m. Singapore time and 9 a.m. Eastern Standard Time if you're based in the US. And if you like money and crypto, make sure to smash the subscribe button. Manish, back to you.
So today I'm going to cover a basic thing, and sometime we don't understand actually what is a return on investment. So I'm going to talk on return of investment. ROI is a kind of way to measure an investment performance. As we all expect, it also a great way to compare the profitability of a different investment. Naturally, an investment with a higher ROI is better than an investment with a lower or negative ROI. Whether we are day trading, swing trading, or long term investor, we should always measure our performance. Otherwise, how would we know if we are doing well? One of the great benefit of trading is that you can rigorously measure how you are doing with objective metrics. This can greatly help eliminate emotionals and cognitive basis. So how is it useful? Well, the human mind tends to build narrative around everything. So if you are producing negative returns, sometimes should be changed in your strategy, and all these you can track it with with the ROI investments, means ROI based on your investments. So in the past, we have discussed risk management, position sizing, and setting up a stop loss. But how do you measure the performance of our investments, of your investment? And how do you compare the performance of multiple investment? This is where the ROI calculations comes into the picture. So let's talk what is return of investment. Return of investment is a way to measure an investment performance. It also can be used to compare different investments. There are multiple way to calculate returns. You'll cover. Okay, so let's talk about the formula. How to calculate return on an investment ROI. So ROI formula is quite simple. You take a current value of your investment and subtract the original investment cost. Then divide the sum by the original cost of the investment. You will get your ROI. So how much profit you make by selling a certain stock or a crypto? So what you had to do is to get the ROI, current values minus original cost divided by original cost. That will give you the ROI. That means you, and if you give some values, probably if I have a calculator handy, I could have show you the result as well. Okay, let's talk on the limitation of ROI. So ROI is a very easy to understand, bring a universal measure of profitabilities. One of the biggest limitation of ROI is that it doesn't take into account the time period. Why does this matters? Well, time is a crucial factor for an investment. There could be other considerations like liquidity and security. But if an investment brings zero point 0.5 ROI in a year, then better than zero point 0.5 ROI in a 5 years. This is why you may see sometimes about the annualized ROI, which represents the investment returns gains you could expect over the course of a year. So it depends on a timing. If you are putting a some investment on a cryptos and that profit you get it, what you get it for 5 years, and the similar amount you are getting it 1 year. So that's why the time period is very crucial when you calculate the ROI. Okay, let me see if I can show you how your calculation works in terms of ROI. Okay, 300,000. Let me show you. Okay, let me share some calculator here. So, talking on the formula side, what I said here is, just give me a minute. Okay, so as I said, ROI equal to current value subtracts by original cost divided by original cost. So think that your current value is 300k. Okay, 60, and your original cost is 200k minus 2 4 5 6. It's correct, right? 200k. Sorry. Yeah. Then divide into again original cost, which is 200. 3 should 0 0.5. So this is how you will calculate it once you are investing on a cryptos. Of course, the time where you will not get accurate figure, that time the time is the consideration factor. There you will not get accurate figure. However, you will be able to get more ideas that what is your return of the investments. So on with that note, our closing thought for this is we have looked at what return on investment is and how traders can use it to make more informed investment decisions. The return of investment formula is a core part of tracking the performance of any portfolio, investment, or a business. So ROI is not a ultimate matrix, but it can be useful. You also need to consider opportunity cost, risk reward ratio, and other factors that may have an impact on your choice between different investment opportunity. As a start point, however, ROI can be a good barometer to evaluate a potential investment, but again, the time factor which you have to think of. That's all I have it, Wayne.
Yeah, thanks, Manish. So I think that's, you can even go online to get some of the
Yeah, these
uh,
calculators.
right the calculators. There's a lot up there. I'm using this one from BTC Hedge. Right, you can put in your initial investment of $1,000. This is actually trading Bitcoin. So 1,000 into the current price, which is about 39,000, you'll get about 0.02 Bitcoin. If you sell it at a selling price, taking into consideration your initial cost to actually acquire the coin and then your exit fee, you would make about $500. So then of course you can get all the other numbers like what Manish has mentioned, that ROI is not what was that statement, Manish? ROI is
The
not the only
time,
matrix.
yeah, is not the only metrics because it fails when you have to calculate the time for a longer period.
Yes. So that time is opportunity cost.
Yes.
Like a recent trade that myself and Manish did, the Bollinger, we sold off slightly a bit early when and at that junction, there was a growth in the Bitcoin and Ethereum. We could have sold it later, but again now we are waiting to get it back in when the Ethereum coin hits the lowest side of things.
Yeah.
So, thanks Manish for that. Let's move on to the markets sentiment today. I can't play the Loon dance. We are back to the 48. So Loon, do apologize. I think when we hit the
60.
the
60
60,
and above.
we will do that Loon dance there. And yeah, so that's something that we are seeing in Bitcoin again. We are not in the actual market of the bull run. However, we are looking for sustainability, which we'll check in the charts later on. So, coming to the stock market today, of course, the stock market opened in an hour's about an hour back, and looking at the fear index again, nothing much is happening on the stock side of things. Um, Bitcoin is down today. Of course, you see a kind of a bloodbath there, and some of the other coins are actually doing quite well in terms of green, and even looking at Ethereum taking up the square space, partly because money is pouring into Ethereum, so it's pushing USDT out into the smaller boxes. So that's something to take note of how this heat
It's
map actually
okay.
works.
We'll invest.
Yeah. Let's look what's happening over the 24 market. So 24 hours. So 6.5 trillion, right? 1.6 trillion. We have still 11,000 over cryptos, 391 exchanges. Bitcoin currently in the last 24 hours, while it's still bullish on a 7-day projection, that it's actually down by 4.36. Ethereum is up by 1.24. USDT is break even. BNB is down by 1.47. Cardano down by 2.04. XRP is down by 0.33. USDC up by 0.06. Doge is down by 2.40. Polkadot is up by 0.68. Uniswap is up by 0.67. And Solana dropping in ranks at the 15 market cap is it's down by 3.37. I was just looking at XRP. So there was the news on XRP going through a legal lawsuit. Of course, if they win that lawsuit, which they will, you might see a very nice price hike in XRP. Of course, again, this is just my own opinion. It's still speculative. There is risk. So always trade responsible, and do your own research. Looking back, of course, in the last year to date, you can look at most of these are all green, right? Except for USD coin, but mostly you can see how the growth in terms of percentage as we start to see more money being poured into the marketplace. Looking at the trends, the technicals chart, the Bitcoin currently now has retested the 41 in fact, and it dropped back down to 40. So we will have to see whether we will break the 40 mark and at least hold stability, because we actually hold for about 2 days playing on the support of 40 and breaking down again, and we are going to hit the moving averages on the 4 hours mark to 39, about 39 to 40,000 on the 1-day chart. Let's see on what's happening on the 1-day chart. So when you look at the 1-day chart again, while there's projection of the golden cross in somewhere in the mid of August, that's yet to be seen. We have broken down. It looks like we are going for a slightly a bit of a downtrend because more sellers are coming in. However, the volume of sellers is still low compared to the bull. We had a very nice bull run from the 21st, right, with Jack Dorsey, Elon Musk, and Cathy Wood. So there was a lot of very bullish over how many days? This was 1, 3, 6, 7, 8, 7-8 days, right? And then now we are starting to see the bears coming in. So let's see what's going to happen in the next couple of days. Of course, on the rainbow chart, currently now is hodl. So for us, we don't need this chart. We are just acquiring Bitcoin every month when we get our money that comes in either from investments or salary. So that's all I have in the news. I can actually open up the channel, Manish.
Yep.
Loon is talking about the central banks that's now. So let's see. So that's so I guess today is a bit quiet. It's a Monday night. Do type in the channel below if any of these topics actually covered today was of interest. We will cover more in times to come. Manish, with all that said, tomorrow we'll see the rest of you folks same time, same channel.
And if you have any further questions, please let us know.
Take care, guys.
Take care, guys.